Hello everyone, I am sorry for not releasing a video. Wait, let me put that like that. Zoom out a bit. There we go. I'm sorry for not releasing a video last night. I was going to, but my girlfriend spent the night and I wasn't really able to record. But yeah, I'll be continuing what we were doing last time right now. So yesterday I was supposed to make day 4 with TJR's new video, but I didn't, sadly. And yeah, I had some really nice feedback on what I've been doing. Wait, can you guys even read these comments? So I don't know how to make my camera more like high resolution. Okay. One of my videos actually got quite a few views. The first video got 300 views, which it might not be a lot, but to me it is, and I'm really happy about it. This was gonna be originally a video with face cam and everything, but I don't want to do it since it's 2 a.m. and I just want to actually get some stuff done. So I'm not sure if you guys can see it, but somebody was in the comments telling me I'm trying to speed up my learning curve. Take your time and learn the concepts. I'm glad they said that, and actually a few people liked it. And also, yeah, I saw someone on my newest video telling me that I should try trading futures. Wait, I'm not sure if you guys can see it well. Right there. If you guys want to go and read it, it's on my last video. But basically, he's just telling me that I should try trading futures because it's easier and I can make money. Is more like basically just faster, and I can reinvest it into what I'm doing. But the thing is, TJR, I didn't understand if he was talking about futures or forex, because I'm doing both, if you can see right here, right. New video, that's S&P 500, that's gold, that's GBP USD, that's GBP JPY, and etc. So that's why I didn't try doing futures at first, because I didn't understand if they both had the same laws. The same like, can I say that? Like the same rules, I guess. But so, I will be trying to learn a bit of futures, because these charts are looking a little weird for me though. Because like, it might just be the side that I'm looking on, like. Okay, so what is this? So look, S&P 500 index. Now, which one am I supposed to be looking at? I'm not sure. Well, let's see if the chart changes if I change through them. So this one. Okay, wait. Changes slightly, but these random jumps in the charts, like I can't even see anything. I'm not sure if that's something to do with me. Market close, okay, yeah, I understand. But I'm not sure what I'm looking at, because like, what is this chart? Like, what? I'm not sure if it's an issue with what's like happening on my screen, but like, what is this? Like, you see this? Like, what? There's like random cuts in the chart, just like completely random, which I just don't understand, and I gotta figure out where to actually trade. So, before watching his video, I wanted to watch a video on how to trade futures, because, yeah, I just wanted to understand what I'm trying to see, so.
Futures are the best day trading instrument there is.
So yeah, let's begin. This is the guy I'm gonna be watching. His video just came up first. I don't want this to get copyrighted or anything, but I just want you guys to know what I'm watching, because I saw one of my videos actually did get copyrighted, I think, because I was watching stuff online. If you guys want to see content, yeah, partially blocked because it's quote unquote copyright, which is just stupid. But anyways, let's continue this.
Futures are a contract agreement to buy and sell a specific commodity at a predetermined price and time. An example of this is oil futures, where you're saying, I will buy 100 barrels of oil at $400 a barrel in 3 months. There are also other markets, such as the S&P 500 futures, that I trade a lot, that are just settled in cash. Now that can sound a little daunting. You don't want to have 400 barrels of oil show up at your front door, but when it comes to practically trading futures, all you're doing is really the same thing as buying a stock, of trying to buy it low and sell high for a profit. Because to get those 400 barrels of oil to show up at your house, you actually have to let the contract expire and have all this other stuff go wrong in your favor. In reality, you're never going to have 400 barrels of oil show up at your front door. All you're going to be doing is just buying and selling and settling everything by cash. And so it ends up being exactly like buying and selling stock. But why futures are better than trading stocks is because you have way more leverage when it comes to trading futures. What this allows you to do is start trading with a small account. You can start trading futures with $1,000 compared to with stocks. To get actual movements of money in the market, you have to have a lot of money to start with, and not everyone can do that. Now, if you have looked into day trading stocks, you will have heard the pattern day trading rule. And so all this rule basically does is it doesn't allow you to day trade consistently unless you have over $25,000 in your account. And futures, they do not have this rule. And so with a small account, like $1,000, you can make as many day trades as you want, allowing you to start with a really small account and day trade whatever strategy you want. And so the futures market I'm going to focus on in this video is the S&P 500 futures. Now this is the future.
I don't really understand the difference, like S&P 500 futures. Like there's more of them. Like I'm not really sure I understand, but I'll try to figure it out as we do everything. And if I'm not able to figure it out, I'll just watch the videos on my own after, or while recording, because I mean, if I have one thing, I have time, so yeah.
For the S&P 500 index, which makes it the most liquid and tradable market. And so if you're looking to start trading futures, I would highly suggest starting with this market. Now, when it comes to buying a futures contract, think of it like buying one share of a stock. In practicality sense, when you buy a contract, it goes up, you make money, and when it goes down, you lose money. And all the difference is that you're buying with something called margin. And all margin is think of it like collateral. You're putting up a certain amount of money to gain control of this contract, and then as you hold that contract, it'll go up and down in value, increasing or decreasing your account. Now, there's a few different things with margin. Because futures trade 24 hours a day, you have something called intraday margin and overnight margin. Now, generally, the stock market as a whole trades from 9:30 Eastern Standard Time to 4 o'clock Eastern Standard Time. During that time, futures are considered intraday. And so the margin requirements for that can be a lot smaller. Generally, it's around, at the base, it's 7,000 or 8,000 for the ES or S&P 500 futures, and then the overnight margin can be double that. And so 7,000 or 8,000 for one contract is still a lot of money, and what a lot of brokerages have is something called low margin requirements. So for one contract of the ES futures in intraday, you can get requirements as little as $500 per.
Wait, so many? What the hell is that? S&P 500. Okay, well, yeah, this chart doesn't look broken. I'm not sure if I'm looking at the right thing, but S&P 500. What the hell? What the hell is this? Give me back to this. One daily, I want 5 minute chart. Reset review. It's still like, what the hell is that? But it looks fine. In my opinion, like, what the fuck was this? Like, what? Is this the bug in the chart, I guess? Well, anyways, let's go back.
Contract. And so this allows you to trade with that small account that we were talking about. Some good platforms that do this are NinjaTrader or Tradeovate, and what they do is they just allow you.
Oh, I've actually watched this guy's video before. I've seen it while I was in school. I was like researching futures. I've heard about his like Ninja whatever.
Platforms that do this are NinjaTrader or Tradeovate, and what.
Okay, wait. NinjaTrader. This isn't really important right now, but I just want to see. NinjaTrader. Yeah, let's say we get started. I'll just continue with Google. Okay. I'll put my real name, but like, it doesn't really matter. Okay, I just can't edit my name, I guess. What? Okay. Live trading account, open account. Well, this is individual, I guess. Oh. So it's not available in my region, so I'll have to use VPNs. Okay. That really sucks, that's really stupid, but what can I do? Individual. Country of residence. What the hell are you saying? Bro, what? Oh my god, why isn't it available in Serbia? That's so stupid. I'm not sure if I'm a little too loud. I'm actually standing pretty close to my camera. No, I'll show my setup probably like tomorrow. It's pretty horrific, but I hope you guys understand that my setup isn't important to me. I'm just trying to. There we go. Oh my days, do I really need all of this? Okay, so I can't make this shit right now. That is not important. I can do that later.
What they do is they just allow you to trade futures with that low margin requirement, and their account minimums are very low, allowing you to easily get access to trading futures. Now, another big difference between futures and stocks is stocks trade on a dollar basis. So if you have $1,000 stock and it goes up $1 and you have one share, you've made $1. But with futures, they have what is called a tick and a point. Now, a tick is the smallest amount of movement that the market can move. And so with shares, usually this is 1 penny. Usually the stock can go up pennies at a time at a minimum, or even more. But with futures, they have different increments. So one could be 0.25 or one could be 0.1. Now with the ES futures, the minimum movement or the tick value is 0.25, and a point is 1. So a tick is essentially a quarter of a point, and so you can see when you're.
Okay, wait. I won't be writing this down now because I have more stuff I need to do. But yeah.
So looking at the market move in real time, it is going up and down in 1 tick increments, or 0.25, or a quarter of a point. And so because of this,
I'll be writing this down later.
At $1, each different futures commodity has a